All right, it's been some time since we did a video here, and we've come a long way with the session volume weighted average price playing the intraday, something I'm just kind of really enjoying lately versus the swing trade, although I do play both. But the intraday, tough business to make money at an intraday level with intraday prices, but if you can peg it with a large number of contracts, you can make some good money, get into the market, get out of the market, in a single day. And yeah, there's a little bit of sweating that happens, I think, on the intraday level, but if you can fine tune it, you can definitely make some good quick cheddar playing the NASDAQ here. So let's just jump into the chart to see what we're looking at today. So purple horizontal line here is 8 a.m. morning session opens for the for intraday rates, and this royal blue line here is what I call the heavy hitters. So in between the sticks today, looked like the market wanted to advertise price higher, and they really did. So I'm always very cautious about these type of runs this early in the morning. Um, is it a little bit of fuckery going on? Is there a little bit of ulterior motive happening here with driving the price higher, and then for the rest of the session we're bleeding out? We've seen that quite a bit. We've definitely seen that happen. But the one thing that I have been looking at all along, and I kind of do side-by-side view here of both the micro contract and the large contract here. So got to have the side-by-side view. But what I've been looking at today is this 2-hour divergence that's happening, and this is pretty significant, right? This is really significant. This has been a bread and butter technique for me for some time now with Williams professional buying indicators. So this is a really nice divergence that's happening here. The 1 hour doesn't hold as much weight, but sometimes the 1 hour gets started. So we did get this kind of inflection point that happened today. I would have been back here a little bit further. Let's get into here. So are we on the 60? We are on the 60. So we did get this, well, no, we've been diverting, kind of all along here too, even on the 1 hour. So this little hiccup it doesn't look like much on the 1 hour chart, and this little hiccup, and we're still looking at a nice divergence that's happening. So we got a nice 2-point divergence that's going on in the 1 hour. If we can consolidate this just a little bit more, that's usually a better way to get a look. So this is, this always comes into focus here when playing the intraday chart too, to try to hold like a bias for the intraday chart. So we're getting these runs up here, but we're diverting. So working into tomorrow, I may hold a bias here because this looks like a nice 2-point divergence. I mean, I like something a little bit, like to see something a little bit more, but I think my bias tomorrow is going to be towards the downside. So up near the 3.25 of the control price. Here's that the channel that we're working with. It's not beautiful. It really isn't. And business down here has been pretty darn nuts. The intraday chart has been pretty chaotic, quite a bit different than the bull market that we saw, but they're trying to edge their way out of this. Let's see if we can bring it in here, of this channel. Let's bring it in here. They're really trying to edge their way out of this channel, this downtrend channel. This is the major here. We're up near that 2.25, and they're trying to get out of this channel right now. They really are. So it look like maybe this market has bottomed out. But time will tell. We look like we're oversold here on the daily chart. Overbought on the daily chart. But look at commercial interest. Commercial interest is having a lot of this right now, and that usually bodes pretty well towards bottoms. So these guys like to start getting that long when the market's turning down. So this has been a pretty good indicator, I think. Um, when the indexes or when the indices, it's kind of hard to trust commercial interest in these man-made markets, but as Larry would say. But I've got a bias. I got a down bias for the next couple of days. So even if they decide to push the high here, um, still above that 1.25, which usually bodes well for upward trend. So we're up near the 1.25, but I don't like being a buyer near the 3.25. I don't. Even with the market pushing up like this. So I like playing it on an intraday chart, but as far as swings go, 325 it can be pretty dangerous, but strong trend for the time being. But here's what we were looking at today, and I just want to note what. So look at this. The overnight session is just very one-sided, above the session volume weighted average price. But here is where I've got a problem. And this is where this came from today, and it just didn't look like they wanted to defend this anchor. We're punching above the anchor, but we set the anchor back here. At this run, and what now looks like kind of a false run, but didn't really look like they wanted to defend that anchor too much. They did defend the session volume weighted average price for a little while. For a little bit, it looked like they were defending, but this bouncing between the anchor and the session volume weighted average price just didn't give me a hell of a lot of confidence that these guys were going to try to come and attack the high again. So I got out. I took the money. Right about here off the session volume weighted average price. I took the money, and I was really looking at this area for an initiation, and we ended up getting it. So I got short immediately on this one, and I took the money probably right around the 5 DMA on this one. This push from coast to coast is usually a pretty sticky situation, but they got a nice bounce off the 2.5 of the session volume weighted average price, but they couldn't clear it out, and we couldn't get above it. So immediately flip back to just some quick scalping off the volume weighted average price from this low, from this pivot here, and just took the money off the session volume weighted average price, and then just went short again down here and closed out just before the session. So how can we got enough time here? I get a couple of minutes just to show how I get into this, how we get into tagging, retagging, and following the money. Here. So I started the morning with tagging. I tagged the low of the session down here, and it realistically ran right along the session volume weighted average price. So when we get into highs, whenever we hit a high, I'll tag it. I will come up here and I will tag this. Come on, let me tag. Oh, I think we've got the tag here. We've just got overlapping tags. So here's your volume weighted average price. So we tag the high off of here, and so when we tag the low, we'll do the same. I'll do the same thing. I'll look and see if buyers want to defend against this or if they're losing it. And we had a lot of back and forth today, so this was tough to fight off. But right in these areas, in between this pinch here, I thought they might break to the upside, but it just didn't feel like they were going to be able to do it. So I do this quite consistently, right? We tag. If they want to defend this and they're going to run, and it looks like it's going to continue to the upside, they will defend that anchor. But they started to lose momentum here underneath the anchor, and this right here was a pretty good indication to me that they just couldn't regain it, and the buyers were definitely not interested. Sellers took control here, and that's pretty much how I play it, right? I will tag consistently throughout the day, and they may look like small pivots, to the naked eye here, but these are important pivots because these are, to me, where the primary buyers and sellers are entering the market. So We're running short on time on this video. Hope it gets out, and we'll see you on the next one. Thanks a lot.